Welcome back to the Dividend Diplomats YouTube channel, guys. You've got your boys, Lanny and Bert. Bert and Lanny. He's got the Bautista going on right now. Mad respect to, we were just talking to Billy Gunn in case he laced his boots for the last time, guys. But we're on a dividend investing channel. Stock market is still en fuego, on fire. Green after green after green after green. The street light turns red at some point, right, Bert?
Well, we'll find out if Jerome Powell's sitting there flipping the switch saying it's red, you better jam your brakes on or not. But you're right, Lanny. So we're going to talk about a couple stocks today. It's going to be a lot of fun. But of course, come on, team. What do we have to do before we talk about these two stocks?
Buy dividend stocks?
Hmm.
Hmm.
You bring up a great point, Lanny. Let's pull on that thread a little bit after you subscribe to our channel, after you give this video a thumbs up, after you spread the love for dividend growth investing. That's what it's all about.
All right, guys, like we just said, that stock market is trailblazing, half amazing. Don't even know what's going on right now. Crossing almost, did it cross over 4,600 at the time of this video? It's July 25th.
45.67 is where it finished.
So almost to 4,600, guys. I think my phone has vibrated every day for new year-to-date highs for VOO, VIG, you name it.
Yeah.
I know we're not the only ones over here, right?
No, it's insane. It is. It's wild. Has to be one of the longest win streaks we've seen in a long time where no matter what, you will open up your portfolio, you see green and you're just struggling to find anything. But the good news is your boys here are looking under every stone. We're looking under every rock. We're doing everything we can to find an undervalued dividend stock to buy using our stock screener, which features three metrics: PE ratio less than the S&P 500, payout ratio less than 60%, history of increasing dividends is that third metric, and that bonus metric is the dividend yield. We're always doing this, even when the market's hitting record highs or it's on down days. That's how we find the stocks, and that's what we use when we found these two companies we're going to talk about.
Hey guys, and don't worry, we're not talking about Verizon or AT&T today, so don't you worry. But we are talking about two dividend stocks that have kind of been in the news lately, especially one specifically. Two stocks that I own, and Bert, do you own? Yeah, you own both, I think. Yeah,
I
you own
do.
both.
I do.
Guys, just to kind of rip the Band-Aid, I'm talking about two stocks that I've been building up this year again. One stock in particular, building up to 100 shares, not there yet. But United Parcel Services, UPS, because they just had the news released today on July 25th about the strike being averted from the Teamsters. And then Pfizer, guys, we're still in the healthcare pharmaceutical industry. Ticker symbol is PFE. I own just one share shy of 200 shares of Big Pharma, Pfizer. And these are two stocks that have seen, one stock in particular has seen better days, that being Pfizer. UPS, I think, is just a quality dividend stock that had a little bit of a pullback here on the 25th after the Teamsters deal was announced. So that's why I was like, you know what? Let's talk about the one UPS after Teamsters. Let's talk about Pfizer because it's no sugarcoating, no burning bush over here that, revenue and earnings is declining for Pfizer as COVID is removed, from a comparability standpoint. But again, they're massive. R&D is huge and critical to their ship. But let's look at both stocks, Bert.
Yeah, let's run them through the screener here. And then let's see, are we buying, watching, or what's going to happen after that? Let's start with UPS first. So
Do it.
after the news with Teamsters, they closed at
Do it. Do it.
184.69. Do it. Do it. Their
Do it.
earnings per share, 1069. That's a PE ratio of 17.28, which is below the S&P 500. Remember, we don't try to find the cheapest stock with this metric. We're just screening it to show that it's a discount compared to the market. It's okay if it's not the cheapest one out there. It's okay if it's not, if there's some signs of undervaluation, because we are looking for quality, and that's what you hit earlier, Lanny. And I think it's just important to hammer that point home with a stock like UPS.
Yeah, they pay $1.62 per share per quarter, 648 per share per year. So that payout ratio is right at the ceiling right now at 60% for UPS. So, they're usually a little bit lower, but I think earnings expectations similar across all industries is slightly down right now. But guys, that's the payout ratio. Dividend growth streak, 13 plus years, average increase over 6%. They've been doing very, very well in that department. So with a
Yeah.
6.5 almost percent increase, Bert, what's that yield kind of still been at here in
Yeah.
2023?
Their yield is at a nice 3.51%. So more than double the S&P 500, which is freaking huge. So UPS, just to
Dude,
summarize some of the metrics here, they are a P ratio of 17.28, payout ratio of 60%, 5-year dividend growth rate of 6.41%, 13 years of increase in the dividend with a yield of 3.51%. And the nice thing is that last dividend increase was very consistent at the end of January. It was 6.6%. So it was right in line with that 5-year average.
right in line, baby. So guys, that's UPS. I own over 85 shares. It's like, when in doubt, do I just buy the brown? You tell me. Let me know in the comments. Let Bert and I know what you think about UPS. But let's get into Pfizer. Ticker symbol is PFE. This stock is down 27% this year. They are down 29% in the last 52 weeks, guys. So this stock has been pummeled, been in the 34s, 35s even this year. They're back at about 37 in a share price, 37.06 actually as of the close of July 25th. Now, the interesting piece here is if you go over to Zacks, industry investment website, they're expecting right now about 60 cents in earnings per share, which is about in line with what Yahoo estimates have for this upcoming quarter. I think they have about 58 cents, but Yahoo estimates right now show over $3 in annual earnings per share. But I said, you know what? Not right here, not right now. Let's be uber super conservative on Pfizer. Let's just use 60 cents times four. Let's just use $2.40 and to see if, we see a little blood in the water here with Pfizer.
Yeah, it can't hurt to be conservative. That's never a bad move to make. So when you take the conservative, that gives you a PE ratio of 15.44. So even with the conservative estimate, still a discount compared to the S&P 500. So let's look at that dividend.
And
$1.60.
still,
Yeah, $1.64. Divide that
so
by
screwed up.
$3.40. That's a 68% payout ratio there. So
So
yeah,
higher now, guys, creeping
remember
up.
remember that's conservative though, Lanny, because you said, I mean, if you use the Yahoo estimates, the closer to the $3, that puts the payout ratio below 60%. So can't hurt, even with the conservative number, still plenty of room to maintain that dividend going forward.
All right, Jack. So let's look at the dividend growth streak. They've been doing it now for over a dozen years. Obviously, increases have been paltry, at best about 2.5%. Possibly another penny at the end of this year. We'll have to see what Pfizer really wants to get us. They start going into this half-cent bullish. I'm going to be pretty upset here, guys. But their 5-year average DGR is 4.19%. But Bert, this stock is down almost 30%. What is that yield now looking like because of that, brother?
Jumped up to 4.43%, which is above its 5-year average of 3.74%. That's where you really see the price decrease and the undervaluation sign screaming in that yield compared to the historical.
Screaming, just
It is.
screaming.
It is. You tell me it's not. I'll tell you it is. Forget about it. So let's go
Forget
to,
about it.
yeah, PE of 15, payout ratio of 68%. Again, remember conservative estimates there. 5-year dividend growth rate of 4.19%, increase for 12 years with a yield of 4.43%. So what are we thinking here, Lanny? With the current market where it's at, the fact that you still found 2 stocks in your portfolio that are showing signs of undervaluation to even consider right now after the S&P 500's long streak's a testament. What are your thoughts here? Are you buying? Are you watching? What do you do?
I might consider chewing at UPS. I'm just not much. This earnings season is a little weird. Everybody thinks this is like this, the bump up before we bump back down moment. But you can't time the market, guys. For all we know, there could be another surge of 10% after this. Plus, obviously, the market always trends upwards. So, I really like, I have a lot of, pharmaceutical healthcare. So I'd like to get UPS possibly. I might be okay at these prices. I really will have to really think about it. But whether I want to do that or just more into VYM. But
Hmm.
UPS is not looking bad right now from an overall
No.
quality company. I know people are afraid with Amazon deliveries, etc., that UPS is going to get taken out. But
Yeah, that's old
I
news.
would beg to differ.
That's old news. That concern is going to be there and it's always going to happen. I mean, look, if you're looking to buy an individual stock right now, you own UPS, you own Pfizer, and you want to add another share too. You want to put some money in the market, take it off the sidelines, put it into a stock that is undervalued, that has a yield well above the S&P 500. These are two great options to consider.
Yeah.
You need right now.
Pfizer again, just kind of really, I think they release earnings here in a couple of weeks. So or in a week, would like to, really take a look at that, see what shakes and bakes there. What about you, Bert?
Yeah, I mean, I'm gonna watch them. It's not. I'm in the same boat. It's what do you want to do with some of these companies, and they're not bad options, especially come Friday. If I haven't done anything, throw some money at them. It's all good. I mean, we know people have emotions about Pfizer. We see that in the comments to the video, so it'll be interesting to see if people still feel the same way. But so many other stocks have popped up as well.
So, guys, let us know what you would do here between UPS and Pfizer. Which is the better stock to buy? What other stocks to buy right now are out there on your radar? Let us know in the comments below. Subscribe to this channel. Definitely like this video. And Bert, what do we have to tell the people that haven't subscribed yet?
You're either with us or you're against us, Jack.
Oh, the Jack's in there too, brother. Guys, that was Bert and Lanny from the Dividend Diplomats. Over and out.